Hello all and welcome again in the series of lectures for financial accounting and analysis. And I, Dr. Shikha Jalota, welcome you for this session. So in the previous sessions, we talked about the journal, how to prepare the journal entries, and we have prepared the ledger accounts for that, and finally the trial balance. So moving ahead with it, before proceeding further with the final accounts, let us discuss certain things about subsidiary books, and then we'll proceed further for the final accounts. So let us see what are subsidiary books. As you all know, subsidiary books, as the name suggests, is basically books that needs to be prepared along with the journal. Now, suppose a situation where there is big business, and in that big business, there are hundreds of transactions related to cash in a particular day, right? So, suppose if there are hundreds of cash transactions in a business in one day, so there will be a hell lot number of transactions related to cash only for a particular month, let's say. Now, suppose if for that particular cash transaction, see if you have to prepare the journal entry and then you need to proceed it further to the post it to the ledger account. So it takes a lot of time. So in order to make the things easier, what accounts has adopted is that the things which are being regularly done in the business, like for example cash transactions, like sales, like purchases, what it is being done here is, in order to avoid the two-step process and to reduce down to a single step, rather than preparing the journal entries, the ledger posting in respect to the frequently occurring transactions, like cash transactions, like sales, like purchases, or bills book. See, this is the example I'm giving you. Since business is there, so sales or the purchases, this is a very regular transaction in any business, right? If it is a business, so you can say that transaction related to cash is a very, very, very frequent thing to occur in any business, right? So you are taking a two-step process, like first preparing the journal entry for all such transactions, then preparing the ledger account for such transactions, for posting all the cash related, for posting the sales related transactions, for posting the purchases related transactions. So in order to avoid the burden of preparing the journal entries for such regular transactions, what is being done is the accounting concept, accounting rule has reduced down this two-step process of recording the transaction in journal entry first and then posting into ledger. It has been reduced down to directly preparing a sort of subsidiary books. So this subsidiary book, what it will do, it will simply reduce down the preparation of journal entry and directly recording that related transaction in subsidiary book, for which you don't further need to prepare the ledger accounts, right? So what is happening here? We have reduced the process of preparing the journal entry and then posting that journal entry into the ledger account, and we will be preparing the subsidiary books. For example, in reference to cash, we will prepare a subsidiary book. In reference to sales, we can prepare a subsidiary book. In reference to purchases, we can prepare a subsidiary book. So what will happen with the preparation of the subsidiary books, that we don't need to go through with the journal entry, preparing the journal entry for these transactions. We don't need to prepare ledger accounts for these transactions, for these things, and we can directly make the entry in the subsidiary book for such transactions, right? So what subsidiary book is doing, it is reducing down the two-step process into one process, and that is the major role of subsidiary book, to make the things easier, to make the things less complicated, to reduce down the time and effort required for two step process and reducing it to one step only. So if you are preparing the subsidiary book, you are not required to prepare the ledger account, or you are not required to prepare the journal entries for such transactions for which you are preparing the subsidiary books. I hope the things are a bit clear now. So let's take up example of cash here. So suppose if you are preparing a cash book, the subsidiary book for cash related transactions is called as called as cash book, and this is a very common, you can say, subsidiary book used in almost every business organization, may it be small or the large. So once you are preparing the cash book, you are not required to prepare the journal entry for the cash book, or nor you are required to prepare the cash account. Simply what you will do, you will prepare the cash book, and in that cash book you can directly make the entry as the cash is going out of the business or the cash is received in the business. So what is this? You have made the direct entry in the cash book. So you have reduced down the time and energy for preparing the journal entry. You have reduced down the complication of preparing the journal entry and then posting it again in the ledger account at the next step. So these two steps are being replaced if you are preparing the subsidiary books. So this is the importance and the role of subsidiary books. I hope with this introduction, you have been able to understand what is the subsidiary books. Let's move further with it. Now, see, it says that subsidiary book is the subdivision of journal. Of course, it is a subdivision of journal. Division here means either division. Why we are calling it as division? Because for the transactions for which you are preparing the subsidiary books, you are not required to prepare the journal entries. But for every other transactions which are not recorded in the subsidiary book, for that you need to prepare the journal. So you will be preparing the journal also, you will be preparing the subsidiary books also. But the difference is this, that for the transactions for which you are preparing the subsidiary books, you are not required to prepare the journal entry. But that doesn't mean that journal will not be prepared. Of course, the journal will be prepared, because there are certain many other transactions which will not be recorded in these subsidiary books, because you are not preparing the related subsidiary books. So for those transactions, you need to prepare the journal entry and accordingly the ledger accounts also. So that is why it is being said that it is a subdivision of journal. Then these are known as book of primary and prime entry, or books of original entry, as all the transactions are recorded in their original form. Like if you are preparing the cash book, all the original transactions are recorded in the cash book, whether you are you call it as the primary. That is why it is the reason that you call it as the primary books or the book of original entry. Then in these books, the details of the transactions are recorded as they take place from day to day in a classified manner. Exactly the way you prepare the journal entries in the chronological order as per the like sequence of occurrence, in the same way, if you are preparing the subsidiary books also, in that you record the transactions as per its occurrence. So moving further with the subsidiary books, here you can see the journal is subdivided into subsidiary books in order to avoid inconvenience of recording all the transactions in one journal only. So what we are doing with the subsidiary book, we are avoiding the burden of all the journal entries in a you can say one journal only. We have distributed the entries in subsidiary books and the journal. So the function of the specialized journal is to simplify the recording of daily recurring transactions in a separate journal. This is what the basic aim of preparing the subsidiary books, that the transactions which are regularly occurring in the business, or of a recurring nature, like cash transactions, like sales transactions, purchases transactions. So the motive behind it is to reduce down the time and energy and effort on these recurrent transactions for and reducing it from two process to a single step process. So now you can see here the types of subsidiary books that we prepare is, you can see we prepare the journal as the first point of entry of transactions. And in journal, we have two types of divisions here. One is the general journal, other is the special journal. So this special journal is nothing else but the preparation of subsidiary books. So whatever entry you are recording in special journal should not be recorded in the general journal. And the entries which are not recorded in special journal should be mentioned in the general journal. Like suppose, as you can see here, let's go further, then I'll come back to the general journal again. Like as you can see here in the chart, the special journal can be prepared uh, under different books like days book or the bills book or the cash book. Now, cash book is simply related to the cash transactions. Whatever the cash transaction the business is doing, that is recorded under the cash book. So if you are recording the cash transactions in the cash book, you are not required to prepare the journal entry for the cash transactions in the general journal. So this cash transactions will be recorded only in the cash book and not in the general journal. Then comes the bills book. Bills book means bills payables, bills receivables. If you are preparing the subsidiary book in the form of bills book, where you prepare the bills receivable book, bills payable book, in that case, you are not required to pass the related journal entry in the general journal. Then comes the days book. Days book means purchase book, sales book, or the returns book. So if you are recording the transactions related to sales or the purchase or their respective returns in the days book or in the form of subsidy books, then you are not required to prepare such journal entries in the general journal. So the summing up point here is that journal is divided into two parts. One is the general journal, other is the special journal. So if you are preparing a subsidiary book under any of the special journal related to cash transactions, related to sales, related to purchases, related to bills, then in that case, that journal entry should not be appearing in the general journal. General journal will have all the other entries other than these related transactions. So I guess I have made the things clear to you. So we will move further with the cash book. What is cash book here? A cash book is a form of, you can say, book or the sort of account where we record all the cash related transactions. So either the cash is going out of the business or the cash is coming into the business. We have to record all the cash related transactions under the cash book. And if we are preparing the cash transactions under the cash book, then we are, as we have discussed in the previous slide also, we are not required to pass the journal entry for such books, for such transactions. So this is the detail for the cash book. Now we'll move further with other subsidiary books in the next, you can say, session, as keep the content that we have covered till now intact. Do revise what is subsidy and the general journal and the special journal, and we will move further with related topics in the next lecture. So this is it for now. Thank you all. We'll meet again in the next session.